Okay, so this is basically going to be my weekly outlook. I'm doing it on Monday night. Basically because Tuesday is usually the time when most of the volatility and the activity in the market picks up. So let's take a look at gold. All right, weekly outlook for basically 12/7 through Friday 12/11/2020. All right, so here's my chart. Now, people trade with naked charts. I use indicators. All right, so I'm going to show you why I basically use indicators. This is on the weekly chart. As you can see, we had some uptrend, and it basically stopped right here at around 1925. It got all the way up to here, but it basically consolidated around this area. Went down to 1775 or 1750, around that area. It stopped and it picked back up. So what I believe is going to basically happen here is this is going to continue to fall because my TDI basically just fell through the 50 level. And what that basically means to me is that the strength is now in a more bearish tone. Now, that being said, here's the antithesis, antithesis to that. There you go, that's the word. Jay Powell is going to have a press conference next week. There's going to be a rate decision next week. And within that rate decision, he's most likely going to announce further easing because of what's going on in the world. The coronavirus is having a second wave, and he's going to want to provide stimulus to head off any type of shutdowns or any type of stagnation that's going to happen within the markets. So I believe my indicators are telling me that this most likely is going to go down, but because of news, I believe that the dollar is going to be diluted and devalued more because of QE. So gold is most likely going to go up. Interestingly enough, it's above the 200. You get all that, but all these indicators are saying that it's going to go down. It basically bounced off the 1775, and if it was going to go down, it would go down to about 1550, somewhere in that area. So on the upside, there is no real upside marker because gold has never been this high. I have a way to basically look at it, but for right now, that's not on these charts. So with that, I will say sky's the limit on gold, and I'm going to go to Bitcoin. All right, here we are on Bitcoin. And Bitcoin, this is on the daily chart. It's easier to look at on the daily chart. Once again, this market is saying that most likely it will go down. A lot of times gold and Bitcoin run together because it's the safe haven people looking for safety. It's basically safety. And people are starting to look at Bitcoin as a safe haven cryptocurrency. So this indicator basically is indicating that it's bearish. It's going somewhat bearish because it's below this right here on the TDI, the market trend line. So giving that says that this might most likely will fall. But once again, I believe the dollar is going to basically be devalued, and it will go up also. That's within this month, within December. on to oil, or WTI oil. Look at this. Since the market crash in April and March, April, and when oil actually went negative, it's been gaining. It's been nothing but gaining. And what I believe is happening is because the production has basically fallen. I heard one of the talking heads talking about that consumption has gone down because nobody's really driving. So production has also decreased. Okay? And there was the thought that there was going to be an oil glut coming out of Russia and the Arab countries. So that basically probably started, but then when they saw that the prices were, I guess, falling through negative and getting them shutting down some of the companies that basically were in the U.S. and in other areas, they have pulled back on production, and now oil has been doing nothing but for the last, since about May 17th, just gaining against the dollar, right? I guess that's the other thing. Since the dollar, once again, is being devalued, oil is also going up. So consumption rate is down, and production is down, and the dollar is being devalued. So that's going up. On to the loonie. So here we have this, and something that I should also tell you is that these green lines are monthly lines. These magenta lines are weekly lines. So what we have here is the loonie just fell through a support level, as you can see, going back a little bit of a ways. And there's a couple of touches, 1, 2, 3, 4, 5, 6. Okay, so basically it's falling through. So the next level that I'm looking for this to actually reach is 2450. It could definitely do that, because once again, as you can see, what is selling off, and it's been that way since Jay Powell has been doing quantitative easing. So that's been since about March, April, and it's still falling. So the next net level that I will look for on the dollar CAD is 124.50, and my indicators are basically given this. This is pretty decent right here, because what this is telling me is, right, you've got this downward motion, and then this and this are showing you that there was a bit of a pullback into, a bit of a pullback, a small pullback, not even Fibonacci. Let me just pull that up for a second, but I don't think it pulled back that far. Okay, it pulled back into the 23.6. And which is that's, the general Fibonacci lines are basically 38.50 and 78.6. But this only pulled back to the 23, and then it kept going. So that signals a very strong trend going down if it only pulled back that much on the weekly. So that's the CAD. Let's go to the euro. The euro is in an uptrend, once again, because the dollar is being devalued, and look where it started. It started right around 5.17, pretty much the same area where oil basically started, going up 5.17, and it's just continuing to go up. The next target that I have is 122.50. So at 122.50, and once again you see a little bit of that there was a pullback. Let's see if the pullback was 23.6. There we go. And look at that. 23.6, a very small pullback, signaling a very strong trend to the upside. And it just broke through. And now it's just a small move to 22.50 on the, of course, on the weekly. But that's really from where it's at right now, 121.15. It's about 135 pips. So that's a long ways. But it can get there within the next 3 days if the mix is right. It can definitely get there. Okay, so now we're going to the dollar yen, and the dollar yen is a strange creature because it has been very, very choppy. This extremely choppy, but once again, because the dollar is being printed into infinity, the yen is winning out over the dollar. Over here you can see it. This is below the market trend line, but there's a small pullback into that, and that basically is going to continue to go down. Okay, let's go over to the pound. Now the pound is actually gaining also. Once again, dollar being devalued, and that trend is set. There was a small pullback right here. I'm sure it was probably 28.6. Let's make sure. Let's not take anything for granted. Let's draw that. And look at that. I was wrong. This thing pulled back 50%. That's why you don't take anything for granted, especially when you're doing an analysis. But so that was a strong pullback. That was a lot stronger. And to me, signaling that this move higher is basically not as strong as the other two. Now, this month on the pound, there is the Brexit. Brexit is basically looking to happen this month, at the end of the year. So who knows what's going to happen? And as far as I understand it, no. There is no agreement on there's no agreement on how they should basically exit. They did not come to any agreement. So it might be a hard exit. And that would be bad for the pound. So there you go. And last I'm just going to do next to last, the pound yen. Zooming in, we are, interestingly enough, we are below the 200, but I have the trade line, the market trade line has this going long, and there was actually a small pullback giving you a signal to basically go long on this. So what I would basically do in this situation is I would not go fully in because this is below the 200, and usually the 200 will give you a very good indicator if a currency is bullish or bearish. So underneath the 200 means that there's more bearish sentiment than anything, and you can see that going all the way back towards 2017. So all right, so I would not go fully in. I might actually just day trade this to basically see if I could pull out a couple of pips. But where I'm at on my time frame, This is more likely looking at swing trading, position trading. So that, of course, would be a different, a higher time frame means that you're looking for a longer trade window. So there you go. All right, and then last, I am going to do the S&P 500, and the S&P 500 is moving. Okay, but it's now in there is a bit of divergence coming into this week. I have some data that I collected that makes me believe that this week is going to fall a little bit because of some seasonality, and I will get into that in another video. Plus, there is some software that I'm going to recommend to you guys that will allow you to look at this seasonality, and you'll possibly see what I see. So with this, I believe going into the end of the year, we are going to be looking for the S&P 500 to basically hit new highs, and we're looking for a Santa Claus rally. I believe in the last part of this month, we'll see going into Christmas and New Year's if I guess the big traders, the big boys, want to basically make this a Merry Christmas or a Scary Christmas or something to that nature. Okay, basically hurting people. People won't get a present this Christmas. So with that, I'm just going to end this video very quickly and say knowledge is power, be power hungry, and power to the people. This is Parsival, always searching for that holy grail, signing out.